following hawkish commentary last Friday from Federal Reserve Chair Jerome Powell, who said that it would take some time to bring down inflation with ongoing interest rate hikes. Experts warn that there is still a long way to go before a reversal in monetary policy, meaning more volatility for the S. Market expectations are now widely pointing to another 75 basis point rate hike at the Fed's next policy meeting in September. Roughly 75% of traders are now pricing in what would be a third consecutive increase of 75 basis points, rather than a smaller 50 basis point hike, according to CME Group data. Powell's speech not only shifted the consensus bet for the September meeting to 0.75%, but it also started shifting the curve in 2023, adopting a higher for longer shape, points out Hackett. Fed officials are likely to pay close attention to historical data, especially the period of high inflation during the 1970s and 1980s, according to Nomura's Dent. Previous periods of monetary tightening suggest that the central bank will not ease their restrictive stance prematurely until there is a meaningful decline in inflation back to normalized levels, he argues. With futures markets now predicting rate hikes well into 2023, investors should also be mindful of tighter credit conditions with the 10-year and 2-year Treasury yield spreads remaining inverted since early July, points out Wurm. Yield curve inversions have preceded every recession since 1955, he points out. Stock market sell-off continues as investors worry about higher interest rates. Forbes Dow Plunges 1,000 points after Fed Chair Powell warns inflation requires restrictive policy for some time. Forbes Dow falls over 600 points as experts warn bear market rally is grinding to a halt. Forbes ban.